What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I have 3 hot dividend growth stocks to buy now. I don't own any of them. And of course, remember, dividend growth always wins. Yes, I buy the Yieldmax ETFs. But what do? I use the Yieldmax ETFs to buy dividend growth stocks. These ones, would I add them in the future? I don't know. I was told by M1 Finance they allowed me to get 125 holdings now. But right now I have a certain strategy that I'm focusing on. I'm going to focus on my dividend stocks, okay, that I have, and my Yieldmax ETFs, that my Yieldmax ETFs can buy these dividend growth stocks, and these dividend growth stocks eventually will overpower the Yieldmax ETFs. These 3 are extremely attractive. I would be surprised if you didn't know which one I was referring to that has a stock split announcement that's 4-for-1 that's going to happen soon. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these 3 hot dividend growth stocks right now. This dividend stock has been very attractive for a long time. AFLAC. AFL is a symbol sitting at 87.57. Dividend yield of 2.28%, a PE ratio of 9.66, average volume 2.10 million, market cap is 49.76 billion US dollars, day range is 66.58 to 89.91, day range is 87.08 to 88.29, previous close is 88.40. So with AFLAC, okay, it's an excellent dividend stock, dividend growth stock. Not doing too hot against the S&P in the past 5 years. That's very attractive. But we need to look at a few things that make them attractive. First of all, if you have good revenue, usually you have good dividend growth. Usually. Unless if you owe a lot of money, or you're in a lot of debt, or your expense ratio is high, then you got to start worrying about dividend cuts. But they are so strong right now, I have to show you the trends. So the one thing I want to go over is the AFLAC revenue for the quarter ending in March 31st, 2024. It was $5.436 billion, a 13.25% increase. AFLAC revenue for the 12 months ending in March 31st, 2024 was $19.337 billion, a 3.04% increase year over year. Let's go over a few more things. This is what I like being a dividend growth investor. We need to go over earnings per share. Now, REITs, FFO, that's very important. Just remember that. But revenue trends are always important for REITs, dividend stocks. But I have to go over the earnings per share. This is extremely impressive with AFLAC. So let's just define earnings per share. This is per macro trend. So a lot of you guys are new to this channel or you're watching this. Earnings per share can be defined as a company's net earnings or losses attributable to common shareholders per diluted share base, which includes all convertible securities and debt, options, and warrants. So AFLAC's earnings per share for the 12 months ending in March 31st, 2024 was $9.09, a 25.03% increase year over year. And also, AFLAC's earnings per share for the quarter ending in March 31st, 2024 was $3.25 or $3.25, a 67.53 increase year over year. That's good. Now let's check out the dividend history. I'm going to start in 2018, quarterly dividend, 26 cents, 2019, 27 cents, 2020, 28 cents, 2021, 33 cents, 2022, 40 cents, 2023, 42 cents, 2024, 50 cents. Thank you, Zacks. Now, according to Zacks, a payout ratio of 32%, that's pretty good. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years, 13.74%. If you bought 1 share, you made $2 with a 2.26% dividend yield. Very impressive. Revenue trends, earnings per share, dividend growth. 5 years, 13.74%. Those are the type of dividend stocks. No, I don't own any. That's the type of dividend stock I want my Yieldmax ETFs and my high yield dividend stocks to buy for my M1 Finance dividend portfolio. Now let's jump to the next dividend stock. This one may surprise you. Cintas, sitting at $686.95. Yes, they announced a 4-for-1 stock split. Okay, not a reverse stock split, a stock split. Also, look at the way it has destroyed the S&P 500. So this is IRA material. For me, if I invest in something in my IRA, like I have NVIDIA, I want something that is in line with the S&P or beating the S&P 500. So, like in line, I have SPYG or VGT. Okay, that's beating the S&P 500. This is a dividend growth stock that is beating the S&P 500. And yes, you can invest in individual stocks that beat the S&P 500. Make sure you do your due diligence. Now, don't let this low dividend yield of 0.79% upset you, because I'll go over some positives with that low dividend yield. PE ratio of 47.37, average volume 349.54K, market cap is 69.70 billion US dollars. Its year range is 474.74 to 705.74. Huge jump. Day range 679.82 to 687. Previous close is 684. Now let's go over a few interesting points with the revenue and a few other things. Check out these trends. Annual revenue in 2022 was up 10.37%. Annual revenue was up 12.24% with Cintas. Revenue for 2023. Cintas revenue for 12 months ending in February 29, 2024 was $9.410 billion, a 9.34 increase year over year. Cintas revenue for the quarter ending in February 29, 2024 was $2.406 billion, a 9.87% increase year over year. Now let's go over earnings per share. Look at the earnings per share with Cintas. 2021, the annual earnings per share was up 26.26% increase from 2020. 2022, earnings per share was up 13.77%. That was an increase from 2022 to 2021. 2023, the earnings per share was $12.99, an 11.5% increase from 2022. This is a juggernaut dividend growth stock. Look at this. Cintas earnings per share for the 12 months ending in February 29, 2024, $14.49, a 16.29% increase year over year. Cintas earnings per share for the quarter ending February 29, 2024 was $3.84, a 22.29% increase year over year. Wow. Now let's check the dividend history. So I just want to show you how incredible this is. I mean, I'm telling you, if I had a ton of money right now, this is, yes, I do have a $100,000 dividend portfolio, but I'm saying to myself, this is a good headache to have, and this is a good one to keep an eye on, because the dividend growth is phenomenal. And I'm like, oh, how am I going to add this? And I'm like, I got to stop. So 2009, 47 cents, 2010, 48 cents, and then 49 cents, 2011, 54 cents, 2012, 64 cents, 2013, 77 cents, 2014, 85 cents, 2015, 105, 2016, 133, 2017, 162, 2018, 205, 2019, 255, 2020, 351. What happened there in 2020? Let's go over that. So I'm going to start in 2021. Quarterly dividend, 75 cents, 95 cents. 2022, 115. 2023, 135. 5 years, dividend growth was 23.20%. Payout ratio of 37%. Number of dividend increases in the last 5 years is 5. You bought one share, you made $5.40 with a 0.79% dividend yield. So again, you don't want to always chase yield, but sure, its yield is 0.79%. but the dividend growth in 5 years is 23.20%. That is pretty strong. Let's jump to the final dividend stock. And here's another one. Okay, look, the dividend yield is 0.59%, but the dividend growth is phenomenal. That is MasterCard. They've been right in line with the S&P 500. They're losing just a little bit, but I'm sure they'll catch up and eventually beat the S&P. There's no guarantees, but man, they are doing really well. Again, their symbol is MA, a 0.59%. Don't let that turn you off. The PE ratio is 35.67, average volume 2.41 million. The market cap is 417.43 billion US dollars. The tier range is 359.77 to 490. Day range is 445.11 to 449.25. Previous close is 449.28. So let's look into MasterCard's revenue trends and dividend history. I'm not going to go over earnings per share. Take a guess. It's pretty strong. But I really want to go over the revenue trends with MasterCard. Look at this incredible growth. 2014, annually in millions US dollars, 9,441. 2015, 9,667. 2016, 10,776. 2017, 12,497. 2018, 14,950. 2019, 16,883. 2020, 15,301. Sure, it went down, and then 2021, it was at 18,884. 2022, 22,237. 2023, 25,098. So I wanted to show you the revenue trends, okay, which is quite impressive. So increase in revenue, they have rebounded very strong since the pandemic. They only went down a little bit in 2020, and they jumped right up. 2021 from 15,000 to 18,000, 2020 to 2021. Quite impressive. Now let's go to the dividend history. Again, this is why you don't want to chase yields. Look at this dividend growth. 2015, 16 cents to 19 cents. 2017, 22 cents. 2018, 25 cents. 2019, 33 cents. 2020, 40 cents. 2021, 44 cents. 2022, 49 cents. 2023, 57 cents. 2024, 66 cents. Payout ratio is 21%. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 13.90%. So if you bought one share, you made $2.64 with a 0.59% dividend yield. Now again, I do not own any of these 3 dividend stocks. These are very attractive. Now I own a lot of shares and a lot of dividend stocks, but I have to be honest, and I shouldn't chase yield. Dividend growth wins, but these are ones just to keep an eye on. So, if I get to making $2,000 a month in dividends, could I add them? Maybe. If I have enough adequate shares in my other stocks, maybe. But I do have a lot of stocks, so very attractive. I'm well diversified in the financial sector. Aflac's one that I had and that I sold. That could be one that I rebuy. Cintas is very attractive as well. Very interested in see how they do. If you're new to this YouTube channel, make sure you hit that subscription. If you are new, hit that notification bell, and I will have a video for you tomorrow. You guys take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. I do not own any of these 3 dividend stocks. Do I have an interest? Possibly. Am I going to buy them in the next 3 months? Probably not. It is best to seek financial advice from a financial advisor, so go to them. Don't go to me, because this is entertainment purposes only. If you're looking for tax advice, go to a tax advisor, not me. So go to your tax advisor for tax advice. Investing is a big risk. You can gain money, you can lose money. So make sure you do your due diligence. And I enjoy doing these videos for you. Again, it's strictly entertainment purposes only. You guys take care and have a good one. I'll post a video for you